If you're looking for milestones, one that we've been talking about this morning is that we are now officially at the 2-year mark since cannabis became legal in this country. And while it created a lot of business opportunity in the sector, it has not been without challenges, some bumps in the road. We've got a feature on our website, for example, that talks about some of the issues of figuring out the supply-demand imbalance, companies dealing with COVID-19 as well, including the relatively new CEO of one of the best-known names, Aurora Cannabis. Miguel Martin is that CEO, and he joins us this morning. Miguel, thanks very much for being with us.
John, thank you so much for having me.
Let's talk about, first of all, you stepping into this role, your road towards becoming chief executive. Maybe you can elaborate to our audience a little bit on how that path unfolded.
So, I spent about 20 to 25 years working on regulated products all around the world. And I think, there's a lot of, connections to the cannabis business, say the tobacco or alcohol or other key businesses that I've been focused on. As these companies have made the transition from strong entrepreneurs into publicly traded vehicles, I think the classic consumer product goods, focus on marketing, consumers, regulatory compliance really add value here. I had a strong business in the United States, cannabinoids around CBD, and with the connection to Aurora, it did seem like an obvious fit. And I think my 25 years of history, plus the strong foundation that Aurora has built, really positions the company well to do, exceedingly well in this very fastly, very dynamic global cannabinoids business.
Well, timelines, I think, are important. To your point, you've got more than 2 decades of experience working in the consumer sector. We're talking about a legal sector here in Canada that is just 2 years old. I don't think anybody ever expected we would know exactly how things would play out, but I was alluding to the fact that we've got a feature story on bnmbloomberg.ca on how the supply-demand imbalance looks very real right now. How are you approaching that?
So, it's a great question. When you look at where the category and the business thought it would be 2 years ago and where it is today is dramatically different. Companies being agile and being able to identify exactly what is the proper production to meet that consumer demand is important. At Aurora, we're demonstrating a lot of flexibility. If you look at the 4 key parts of our business, as defined by, really leading with the domestic medical business and our key patients, particularly our veterans, which are so important, our international medical business, our domestic rec business, and then the CBD business in the U.S., 3 of those businesses are doing very well. And it's the domestic rec business, that we've had some opportunities in. Aurora is blessed with tremendous brands, particularly premium brands like San Raf and Aurora. And I think our ability, to grow those brands and to right-size the production, as you so, aptly mentioned, is really important, and we're all figuring that out. Again, I think my background in CPG and understanding quickly moving categories is helpful, but I just would take a second really to congratulate the Canadian government and regulators. I'm doing something incredibly unique and in such a compliance and science-driven way. You recognize the 2-year anniversary, and it's really, a great testament to the hard work that Canada did being a leader in this category. And on behalf of Aurora, I would like to personally say thank you to the government, the regulators, our consumers, and obviously, most importantly, our employees and our patients.
Okay, fair point. The story on pricing, and you alluded to the fact that you're going to be focused on some of your premium priced products. This part's been really tricky, Miguel. We talk about it all the time. We were talking earlier this week around how it appears that, broadly speaking, for the legal market, that price matters, that people do tend to gravitate towards things that are essentially lower in price. And when we got started in this legal world, I think we were really trying to figure out which brands are going to stand out throughout this. Clearly, that is going to be a focus area for you. Maybe you can shed some light, though, on how you see that, because, for those who aren't familiar with the products that have been standing out in the cannabis sector, how do you build a brand similar to, I don't know, Nike or Starbucks, whatever it may be? It's just the brands that are go-to for any consumer.
It's a tremendous question, and the narrative has been that cannabis will be commoditized and that the lowest cost value product will win no matter what. If you look all across the globe in regulated market, it's just not the case. whether that's alcohol, tobacco, other markets where marketing is restricted, or have a lot of the same constraints that we see here in Canada. There's no question that value plays a role, but if you look at the core components within cannabis, whether it's flower, there are some tremendous premium brands. Aurora happens to have one of the most premium. In Whistler, we also see in emerging products such as vapor and pre-rolls and concentrates, there really is an opportunity to provide value to the consumers to deserve those higher margins. And so Aurora is focused on the entire architecture of that pricing portfolio. And again, I think my background is really helpful here. But to believe that this category will operate uniquely, unlike any other regulated category anywhere in the world, and not have premium brands and not have good brands, just really, I think, is not fair to the consumer, not fair to the economics. And so we're very confident that with the right products, with the right quality, you can have premium products, you can have mid-tier products, and you'll always have value products. And I think, the Canadian market clearly will demonstrate that. The other point I'll make is if you look at the U.S., particularly California and Colorado, which are more mature from a cannabis standpoint, you have seen the articulation and the evolution of premium products and premium brands. And so Aurora is going to work extremely hard to build those brands up, and we're very excited with the brands we have, and we know that if we deliver that type of value to our consumers, we will obviously be able to have the economics associated with premium brands.
So that's part of the path ahead. Miguel, I have to talk about what we have seen financially, whether it's you or other players out there. Certainly in your case, I mean, we're talking about some big dollars with the write-downs that we've seen. It almost feels like a hangover. We've been trying to figure things out. There was a lot of excitement early on. There was a lot of aggressive behavior to grow operations. But you guys are sitting here after some pretty hefty write-downs so far this year. Can you just give us your take on where things go from here? Do you have to continue with that kind of activity?
Again, it's a really good question. And so when you think about these type of products and the type of infrastructure required to service these products, you had to make bets way in advance. And the market and the global opportunity looked totally different 2 years ago than it does today. And so I'm very confident that we've done almost most of the heavy lifting that we needed to do, whether it's been write-downs or, unfortunately some layoffs or some right-sizing the infrastructure. But the future is very bright for cannabis. If you think about the rec business in Canada, it continues to grow and obviously complements the regulatory authorities. If you look at the global cannabinoid business, that is growing at a rapid pace. Clearly, we'll hear some news from the election in the United States from there. And so the overall picture, is one that I think is strong. When you have this type of consumer growth, it really is more about right-sizing infrastructure, delivering the right terms of value. And I understand it's been a tough road for a lot of folks connected to this business. But for most of the companies, and particularly Aurora, I think you're going to see a fiscal discipline and a real focus on how to make money in these key markets, including Canada. We're obviously going to be releasing financials in the second week of November. And I think, as consumers look forward to that and to this industry, I think they're going to see growth and opportunities for companies to make money, which is really the delineation that we're all looking for.
All right, so we'll talk more about those numbers when they are reported coming up. Real quickly before I go, though, just based on everything you're saying, I wonder about consolidation in this sector. We've talked about it since day one. You talked about needing discipline. What is your belief? How do you approach the idea of M&A activity, whether it's your own company or within the sector overall?
Yeah, I mean, clearly, if you look at capacity, the case would be there for consolidation. I think, what I would say from that aspect is there is going to be room for bigger companies and some smaller niche companies. If that requires consolidation for those companies to be healthy, then so be it. From an Aurora standpoint, we don't need consolidation. We're comfortable exactly with our plan forward. If that opportunity presents itself, like any publicly traded company that operates with fiscal discipline, we'll take a look at it. I think overall, though, when consumers look at this and investors look at this business, I would encourage them to look at sort of three things. First is that the pattern is growing from a rec business. The business is getting bigger. Secondly, there are going to be opportunities to make money, particularly with the newer products, vapor, what we call Gen 2, concentrates and pre-rolls, and that will be additive to the overall business. And third is, to your point, companies are going to be operating in a much stronger way. If that results in consolidation, and so be it. It's not something that we're looking for or that we're going to look to accelerate. We feel very comfortable with the brands we have, the people that we have, and our pathway forward.
Miguel, thanks for stopping by this morning. Appreciate the update.
All right. Thank you, John, so much, and all the best to your audience.
Thank you very much. Miguel Martin, the CEO of Aurora, joining us with his outlook for the road